According to the Boston College Center for Retirement, half of U.S. households will not have enough money in their retirement account to maintain their standard of living when they retire, even if they work to age 65, and annuitize all financial assets, including securing a reverse mortgage on their home. If that sentence was a little too long-winded, let me make it simpler for you. There's more than 65% chance that the Boston College Center said that people will retire in a state of poverty. Now, 65% of Americans said they'll retire much later, so they're going to be working much longer. And they said part of it is the effects of COVID-19. According to their research, the result is consistent across all political parties, but there's a difference between generations. Millennials and Generation X are significantly more pessimistic about achieving financial security in retirement as compared to baby boomers and the silent generation. This is expected. Of course, Generation X and Millennials are so much more worried as compared to older generations. These are the first two generations that are far less likely to have access to pensions, which typically provide stable income that lasts through retirement. The Millennials and Generation Xers who have access to an employer retirement plan are more likely to rely on a do-it-yourself 401k, plans that have become increasingly prevalent since the 1980s. Here's the one thing you need to understand. 401k accounts were not built to carry the full load of retirement. These savings accounts historically have had lower returns than what they actually need. There's the real risk you will outlive your 401k savings, especially as inflation is going higher and faster than retirement account gains. Don't count on Social Security either. Recent studies have said by 2034 we could actually run out of funds for Social Security unless they fund that even more, but who knows where they're going to get the money for that. It is possible for Millennials and Gen X to see the reduction of benefits by 30% if they withdraw from their Social Security by age 62. Add in college debt, long-term effects of the pandemic, and you have an almost guaranteed retirement that could be less than ideal. Going forward, it will be critical for policymakers to find ways to strengthen our retirement infrastructure so that these generations can be self-sufficient in their older years. In the meantime, you can't count on policies to take care of you when you retire. You can only count on yourself. Invest, diversify, stocks, bonds, ETFs, crypto, real estate, and precious metals. Regularly re-examine your portfolio, recalibrate, rinse, and repeat. There are more economic downturns that will follow. It may not necessarily be the health related to COVID-19, but there's going to be more things that will happen. Don't put your investments at risk. Diversify, hedge your bet. Look at gold, look at silver, look at other investments. Gold is so stable that billionaires are using it as a hedge against inflation. It's the one asset they can count on, and I think you should look at it too. If you want to know more about what we do, give us a call at 877-646-5347.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.